Hi, welcome to Bull and Bear. Are you ready? Are you excited to multiply your money? I am sure you are. Today, actually, we are gonna compare two amazing mutual funds in India. And that is why you see this beautiful picture, which is a note of 500 Indian rupees and 2000 Indian rupees. Actually, it is an example that how these two mutual funds are compared, because both of them are really good and both of them will help you to make money. It is just that which one can help you to make more money. So we are going to compare two mutual funds. They are both called as small cap mutual funds. And what actually small cap means, the investment is done into small companies, the companies which have a less turnover as compared to mid cap or large cap companies. Both of these mutual funds are amazing, and one of them is called as Nippon India Small Cap Fund and the other one is called Quant Small Cap Mutual Fund. Now let's actually see, it's better that I show you what I mean and let's do a comparison. Let's compare apple to apple and then make our own decision which one is good for you and which one is doing really well. So I have done some research, I have done some analysis based on which at the end of this episode we will see which one is better for you, though you may start getting the answers in between. Let's start. So actually, if you see this particular picture, you will be able to get the answers that which one is doing well. So I have done a comparison of last 1 year, and in this one you can see initially Nippon was doing better. I mean, if you see these two lines, that clearly shows. So Nippon is shown in the green line and Quant is shown in the blue line. So if you see, Quant initially was not doing very good, but in the last 6 months, Quant has overtook Nippon India Small Cap Mutual Fund, and currently Quant is doing much better. Actually, the difference between them is significant. So one of them is giving a return of around 68%, that is Quant, and the other one, which is Nippon, is giving a return of about 55%. So that clearly gives us the answer for now, that Quant Small Cap Mutual Fund is better as compared to Nippon in terms of return. But return is not only one thing on which you have to measure which mutual fund is better. There are many other factors which we need to keep in mind, because it's a long-term investment and we need to keep other factors in mind. So let's explore a little bit more. So now here let's look at not only last 1 year but last 3 years, because that is also important, that in the long term which one is doing better. Here also the answer is Quant, because if you see for 3 years the return of Quant is much higher, which is 46% as compared to Nippon's 37%. But as I said, the market keeps on fluctuating, and what makes it fluctuating we are going to talk about. But for now, please see that 3 years return also for Quant is much better, is much higher as compared to Nippon India Small Cap Fund. And this is a clear picture which you can see, which is answering our question which one is better. Both are equally good, both are giving good returns, but definitely Quant is much better, and we are going to go deeper why Quant is better as compared to Nippon. And let's explore, let's look at a bit more in detail. What is the percentage for 1 year, 3 years and 5 years? And here again, if you will see, for consecutive last 5 years, definitely Quant returns are much higher as compared to Nippon India Small Cap Mutual Fund. And let's do a comparison. For 1 year, if we see, Nippon is giving a return of about 55.8%, whereas Quant is giving 68.3%. For 3 years, Nippon is giving 37.6 and Quant is giving 46.7. So there is almost 10% of difference, which is a quite good money. Maybe, in the short term, you may think if you're investing 1,000, 15,000, 20,000, it's not big. But if you see in lakhs of rupees, or even if you are investing in crores of rupees, this money can be significant. 10% can make a big difference. Likewise, for 5 years, 33 for Nippon as compared to 40 for Quant is a big difference. So definitely Quant is doing much better, and we will see what makes it much better. Here is a bit more, I have tried to give you as much as comparison it is possible, not only at different points of time but regular comparison. So let's look at 3 months, 6 months, 1 year, 3 year, and again 5 year. And I just mentioned to you the returns are much different. So basically Quant definitely is doing much better. Actually both of them are very old and they have been in the market for a long time, but definitely Quant's performance is much better, and especially in the recent times. Now let's see what is the reason why Quant is doing much better. So actually you have to understand, in mutual funds one of the most important things is where your money is invested, which stocks the fund manager is buying, what the corpus is made up of, because the movement of that stocks really helps in determining the price of your mutual fund. So the investment which the fund manager is doing into the corpus, into the stocks, is very very important, and that makes a big difference. So let's look at Quant and let's look at Nippon India. Let's look at the companies where they have invested this money in, and you can see clearly here the industries, the companies which Quant has picked up are very well performing. They are doing very good, and I personally see that in the coming next 3 to 5 years, Bharat as a country is gonna do even better in these sectors and for those companies. Let's review them. So let's see Quant, the companies where Quant is investing, and also I think one of the important things is the percentage, because what I have explored, Nippon is investing into multiple companies in small percentages, which is good also because your money is diversified. If one company goes down, or if one company is not performing well, your the mutual fund performance does not get much impacted, as compared to if your money is invested in one big company with a huge amount of money in it, and if that company is volatile or anything happens, your mutual fund also gets impacted. But in this case, actually the industries where Quant has invested, they're very reputed, they're performing very well. Let's look at them. So first one is Reliance Industries, and see the percentage of money which has been invested here, 10%. And that is one of the reasons why suddenly Quant mutual fund has started to go up, because Reliance Industries specifically at this point of time for our country Bharat is doing very well. IRB infrastructure, I think I have covered IRB in one of my previous videos. Please look at it. IRB is doing really well. Geo Financial Services, financial sector overall in Bharat is performing very well, but definitely Geo's performance is very good. Adani, it's not a new name, everyone knows Adani Group, and especially Adani Power is doing very well. So you can see all these stocks which are very good are part of Quant corpus. Hindustan Copper is very important mineral, a very good resource for our country, and it is part of this particular mutual fund which is Quant. And look at BKG Foods, because FMCG is something which is evergreen and it's going to perform well. Nippon companies are also not bad. Let's look at some of them. HDFC, everyone knows. Bharat Heavy is a very good portfolio, but the percentages in which it has been invested is very less. So even if Bharat Heavy Electricals perform the best, it is not going to impact big for Nippon's mutual fund price or NAV, because it has a very small percentage in it. So actually this is very important for you to look at each of these companies where that particular mutual fund, where the corpus is built up of, because that's going to determine the price of your mutual fund. So I personally feel the companies in Quant are very good. They're going to perform even better, and definitely the price in the future will go rise and will be better. So I would suggest you to go with Quant. Let's look at a bit more in detail. Now let's look at the sectors also, because these are the companies. You may not be aware of all of those companies, neither I am, but let's look at some of the top sectors. So again, Quant has invested top 3 sectors: energy, financial and services. Again, these 3 are very important sectors for our country, and they are booming and they're doing really well. Power is very important, energy is very important, everybody needs it. Our country is in a situation where we are growing, we are expanding, and we are ensuring that everyone has access to the basic infrastructure. So these 3 sectors are very important, and look at the total percentage. It is almost 40% of the total investment in these 3 sectors. Now let's look at Nippon as well. Now Nippon also has financial, which is similar in Quant, and the percentage is almost very similar. Services are also there, but here they are into capital goods. Capital goods is something which is almost consistent. It grows a little bit but not significantly, because energy is the need of the day. So energy is doing very well, and that is why Quant mutual fund is performing better, and it is going to continue for next 2 to 5 years. Maybe once we are fully developed country, after 10-20 years, energy may become a basic commodity, and we may consider it like every day, and it's not like a huge potential. Then it may be like capital goods, but today energy plays a very important role. And again, as I mentioned, the top holdings, look at it, and the percentage in each of those holdings is equally important. Now I have done a little comparison, again, just to give you what kind of returns you can expect. And here I have highlighted one thing which is called alpha. So the higher the alpha, the better it is. And what does it mean? Actually, alpha is like zero, is like benchmark. So when we compare other mutual funds, when we compare with the standard benchmark, that's what alpha means. And in the case of Quant, it is higher and it is doing very well. It is almost 11.17, which is much above the industry, the benchmark, and that is why it is giving very high returns. Further on, let's look at some other ratios. I think they're very important. So PE ratio, PB ratio, the lower they are, the better it is. So here you can see for Quant, these ratios are also very low as compared to Nippon. Like for example, PE ratio of Nippon is 29.44, whereas Quant is 24.24, which is better. Again, PB ratio for Nippon is 4.10, and for Quant it is 2.58, which is again very important. Equity means how much money is invested, and cash means how much cash they have. So which is similar. Cash basically, it's very important also that the fund managers have some cash in hand, so that they can look for new stocks, they can see what they can add in the portfolio and so on. So you cannot be completely without any cash in hand, and that is why the cash is important. But both the mutual funds have good enough amount of cash in hand. Other thing is fund managers. I have mentioned in some of my previous videos that who is managing your money. If the money is managed by the right person, who has the right skills, who has the right knowledge, who has the right experience, your money will grow. You are gonna multiply your money. That person is multiplying your money. You are just investing. Whereas if the fund manager is not good, and if the fund manager do a small mistake, your money is at their hand. They are the ones who are investing on your behalf. But again, these all fund managers are very good, qualified, have the right experience, but definitely in the recent times, the investments Quant fund managers have kept in are performing well, and I would say that Quant is doing better here in terms of their fund managers. And finally, these are not very big things, but let's look at the expense ratio. So expense ratio is simply the total amount of money which is there by the number of investment, and that is how we calculate. So basically the some expenses which the fund managers and is doing to manage your fund. And again, the fund size, I think the bigger the fund size is, the lower would be the expense ratio, and that is why for Nippon you can see the fund size is much bigger, so the expense ratio is slightly lower as compared to Quant, because Quant has lower funds in its corpus. And finally, the exit load is there. So you can see for Nippon, the exit load condition is much better. If you are thinking that you may need the money anytime at any point of time, so the better is Nippon, because then you may not have to pay the penalty or the exit load, whereas if it's Quant, you may have to bear some of the costs. So that is an important point to remember, because how long is your time horizon, and if you need the money in urgency, and if it is within a short period of time, then you may need to go for Nippon as well. But thank you again. Before we say goodbye, I would highly recommend you to consider happy investing. What it means is, whatever money you make from your investments, please try to contribute some part of it. It could be a small part in something noble for the good cause of the community, for people around us. Whatever makes you happy, please do that, so that you get more prosperity and good luck. But thank you so much. Wish you good luck. Go with Quant for now. I think it is going to perform even better in the next 2 to 5 years. And my good wishes and good luck to you. Thank you so much.